Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. The mortgage offer has landed and most investors think, great, we're done. But the reality is you're entering the most coordination heavy stage of the entire process. Solicitors, lenders, valuers, brokers, estate agents, all moving at different speeds. This is where delays, expired offers, funding hiccups, and last-minute surprises can creep in. In this episode, we'll walk in through what actually happens between mortgage offer and completion, what can slow things down, what investors need to stay on top of, and how to make sure that final mile is smooth. Let's dive right in. Okay, welcome back, Mark. This is step 4 in this mini-series. And the stage we're looking at now is once you've received your mortgage offer through to completion day, the funds being released and, the next few steps after that. So, we're going to talk a little bit about the solicitor's process, lenders checks, what's going to happen, exchange of contracts, completion date and day, and the movement of funds, and basically all the little mini steps that need to happen in between all of those things happening. So once the offer is issued, obviously that's the point when the legal process begins properly. So we just need to understand really, how that works. Let's pretend that somebody's never been through this process. What is the process at this point? What should happen?
Okay, so offer's been issued by the lender. A couple of things will happen. You as the client or the borrower will get a copy of that offer. But a second copy will also be sent to the solicitor involved, the one that's been either instructed by yourselves or is appointed by the lender, depending on whether you've gone down the panel route or what have you. The offer document being issued to the lender is not an instruction to the lender to act. It's the documentation ready and waiting for your instruction to the solicitor to act on your behalf. So one of the first things you need to do is ring the solicitor and tell them that you want them to act for you, because you'd be surprised at the number of cases that we deal with where people are waiting a week, 10 days and saying the solicitor hasn't been in touch, expecting the solicitor to ring them to start the process. Well, it doesn't happen that way, unfortunately. It's the other way around. So if you've allocated it or appointed a solicitor off the lender's panel, let's say, that documentation will be with the solicitor. You now need to actively ring them in order to instigate the process. Okay, so that's point number 1, and that's probably one of the issues, the most common issues for delays in the process. It can be sometimes people don't come back to us for 2, nearly 3 weeks, check in and saying, oh, so-and-so hasn't been in touch, and we're like, oh, okay, well, have you actually told the solicitor? No. So that can be a major delay. So that's 101. Point 1, please just instruct your solicitor on that. Now, once they are done, once they've been instructed rather, they will then open a file, and then you will go through the onboarding process with your solicitor. So identification documents, source of funds, all of those questions that you would have been asked through this exercise anyway will be repeated because the solicitor needs to verify all of that. Any anti-money laundering, fraud checks, all of that sort of stuff. Again, more and more solicitors now are turning to digital solutions to do the identification and the sanctions checks and all that. So all I would say is just buy into the process on that front. So if you buy into the process and follow it, it's pretty slick now with the technology involved. I do know some people are technophobes and may not get on with it, but that's certainly something to do there. So get that done as quickly as you possibly can. The file is open and then they can start answering the inquiries that they'll have. So what the lender will do in regards to the pack that they will send to the solicitor, they will send a full list of inquiries. Now, the inquiries are effectively a list of questions or bullet points that the solicitor needs to answer in terms of the security and all the legal due diligence that needs to go on through that process. Okay, so they will start picking off all inquiries. Some of them are standard inquiries. Some of them might be bespoke to the type of property that you've got. So, for example, if it's a HMO, you'll have a different set of questions. If it's a single let, for example, around asbestos reports and all of those sorts of things. So that's what will happen. You'll get that through, and then that process will start. The solicitor will also hand you a property questionnaire. Again, don't be put off by it. It can be quite a lengthy document. Don't skirt over the top of it, because you will inevitably have to answer them questions at some point. So just spend the half an hour, 45 minutes it may take to go through the document correctly and in detail. It's just going to make your life a lot easier and make the process a lot smoother. If the solicitor knows everything about the property, they can get on with answering the questions based on how you've answered that part. So they're the very, very basics, the very beginning of the exercise, where you can really lose time and it can become inefficient quite quickly. So that would be my guidance. Get the responses done as quick as possible, but also do them as thoroughly as you possibly can as well. I know not many people like filling in forms, but it's a necessary evil to get you through that process as quick as possible.
Yeah, absolutely. And I think a lot of people they say, I don't know the information. Well, actually, you should have the same form from when you bought the property. If it's a refinance, you should already have some of that information. But obviously, if it's a purchase, then you just fill in what you can, and you get the rest from the estate agents or the vendors. The other thing that people say is the solicitor haven't received the offer, and then they send them their offer. But unfortunately, the solicitor's version of the offer letter is very different to what the client sees. The client gets the front end, but the solicitor gets the full one with the list of questions and conditions that need to be met, as you mentioned. So that's why the solicitor needs their own copy from the lender. Okay, so yeah, ultimately the lender approves the risk profile. So the lender needs to say, well, this is what we are prepared to lend against. And the solicitor's job is to verify the legal aspect of it. Has that risk profile been met? Because again, we've seen this in the past. We've had a legal issue from one lender. The case was declined. And then we said we just went to a different lender, and that fitted within their legal risk profile. It's exactly the same property, nothing changed. They didn't have to overcome it. It's just one lender accepted it and the next lender didn't. So, that's where using a broker, we can find out those, nuances between lenders.
Yeah. And also I would say on that as well, this is the part of the process where if you've not been transparent about certain things, it's highly likely to come and bite you at this point. Now you're already in for fees, valuation costs, and all of this point. So this is the bit really where, people will talk to us. Just give an example: short-term let versus a buy-to-let. Slightly different interest rates, more expensive on a holiday let than it is on a buy-to-let. I'm just going to whack it through on a buy-to-let, but I'm actually going to run it as a holiday let. This is the element where that will actually come to play. So just bear that in mind. If you've not been overly transparent, or if you try to hide anything in the process, it's highly likely to be found in the due diligence exercise from the legal point of view. So this is what that is there for. As you say, does the transaction meet the risk profile the lender's actually agreed with? Yeah,
that's great. So what are some of the conditions that the solicitors need to satisfy for the lender? Some examples of those conditions.
So some of the common ones that we get is, and we're talking about buy-to-let. So on a buy-to-let, property will be that the property needs to be tenanted or occupied within 30 days of completion. So that's quite a standard thing you'll see on there. If they've approved anything over and above the standard terms, that'll be in your special conditions in your offer document. So the solicitor will be looking at the special conditions to sign them off to say that you've satisfied them as part of the loan exercise. And those are just some of the things that you can find in there. And they can vary massively. So I've had scenarios where there was a damp and timber report required as part of the valuation exercise. The lender was prepared to move forward with the completion. However, it was written in the terms and conditions or the special conditions that work had to be completed within 30 days of completion of the mortgage. And then they had to show evidence post that and so on. So Again, very bespoke to the property itself. Not all lenders will agree to do stuff like that, by the way. It depends. It's very lender specific, but you can find those things. And ultimately what the lawyers are, or the solicitors are doing is, as you say, ratifying that has actually happened or is in the process of happening.
The other thing, as an example for this, something like this would be a special condition if you are buying a property with a tenant in situ. So, one of the difficulties is, landlords want to offload properties that have already got tenants in. They're good tenants. They just need to, they don't want to evict them in order to sell. And that's always quite a contentious issue, the right or wrong thing to do, especially with tenants' rights these days. So sometimes there are plenty of deals out there where there are tenants in situ. The lender will want to see a copy of the AST or the occupational contract or whatever the correct tenancy schedule is for that location. And they'll want to see maybe that, the deposit schemes protected and etc. So they just want to see evidence that if they did need to, because once you buy the property with the tenants in situ, they need to know that all of that's been done legally in the correct manner, so that if they did have to repossess, they would be able to evict the tenant effectively to sell the property, because they wouldn't sell it with tenants in situ.
Yeah, I agree. And something that's just jumped to my mind, which is also one of the very first things you need to do, is pay your solicitor's undertaking. So what does that actually mean is you'll instruct your solicitor. Now, this is on the assumption that there are two solicitors involved in the process, the lender solicitor and your solicitor. You can do dual rep, but we'll just work on this single representation basis. What will happen is you will instruct your solicitor, will say, yes, we'll do the work, etc. They then need to commit that you will pay the lender's solicitor's fees, irrespective of whether they're bought or not, up to a certain value and so on. Now, your solicitor is not going to promise to pay their fees without you putting them in funds to have the money set aside so that you can cover the cost. So please, it is standard practice. I've had people come back to me and say, is this normal? Are they trying to rip me off? They're not. They want the funds off you. They're not going to guarantee their own money. They'll guarantee yours. They will sit on it and they will pay that across to the lender solicitor, and it's called a solicitor's undertaking. So get that paid ASAP, because nobody will lift a finger until that's been paid.
Yeah, huge, really important part of this process. The other things that they would probably be looking for is, we've discussed in previous episodes, is the proof of deposit, and the source of deposit. So not only the proof, the source and the source of wealth, and being able to ratify that, which is really important. They'd be looking to make sure that buildings insurance is in place and the property is insurable with their own interest noted on that. So the lender's noted interest. They want to make sure that the property has the correct plan in use, whether if there's been works done, whether there's building control, sign off, is there a HMO license? Obviously the HMO license doesn't carry over. So that's usually one that has to be applied for within 30 days of the transaction completing. So all of these things that, you can submit an application in or have an application ready to go. So those are some of the items that the solicitor is checklisting off on behalf of the lender. So then we once the solicitor's gone through that process, they then start to prepare the certificate of title and then look to request the funds. Do you want to explain a little bit about what the certificate of title is?
So there is a report on title, certificate of title, which is, the report on title is, as the name would suggest, a report back to the lender, answering all the inquiries and basically making a report back that this title, or identifying any risks that may exist and so on and so forth. So what the lender's actually looking for here is they need clean title, okay? Now that is a phrase that ultimately means they just need defensible reach towards the title itself. So they've got control over it in effect. So if they ever need to enforce their security and recover the title document, because that is effectively what the property is this title document, that there's not going to be any obstacles in the way for them to do that. So that's what the solicitor is ratifying, really. Any challenges that may exist will be written on the report, and that will be sent back to the underwriter, who will then make a decision based on the risk profiling that we mentioned previous, that they would then be happy to proceed, subsequently release the funds for completion, etc. Now, that all sounds really great, and we've, within 10 minutes, we've gone start to finish almost, where we're doing the report on title. During the inquiries, very often there's questions that are not straightforward. So things we may come across are ransom strips. Okay, so you got the title document, you got the title, you got the drawing of the plan, and there's a gap between one boundary and the next that someone doesn't own, or somebody does own it, and that may go across the driveway, which means that you can't actually get into your property because you've got to cross someone else's land technically to get into your property. These sorts of things will all come out in this exercise. Now, some of it is indemnifiable, so you can take insurances which will protect against the risk and satisfy that. And it's ultimately the lender's decision then whether they're happy to take a policy for it or not. And you can indemnify against many, many things that exist in property risk from that perspective. So the other thing then is if that's a material issue, they may need to go back to the valuer to ask the question, does this issue materially impact the value of the property? So if, for example, the property is landlocked in ransom strips areas, does that materially affect it? You know, could they then start charging you to cross that 10 foot of land to get into your property? You know, rights of access. You have a right of way. Yeah, and all of that sort of stuff. So these are all they will start to come out and about as part of the legal exercise. And a further delay can subsequently be going back to the valuer. They've then got to pick the report up, make a comment, go back, and then you can see now how these things can start to add time to a process. In that even the most straightforward of ones, if you think, so where we live, they're leasehold properties and the main roads haven't been adopted yet, still in 25 years or 20 years, whatever it is, still have not been adopted by the council. That has been a big issue for people buying property in the area because nobody can sign off the liability for who's responsible for the roads. And the lenders obviously don't want to then inherit that issue. So they're having to take indemnity policies and these sorts of things. So even on new estates, these are, or newish estates, these can be issues that need resolving. In another state that I was aware of, again, another new one, the drainage was a problem. So as they were building, they obviously chucked all the rubble into the drainage and then sealed over the top, causes massive issues of flooding and everything, is now another issue that has to be addressed in the buying process. And these, again, are newish properties. So all of these things can come out in the legal process, which can add complexity, cost, or usually both, and time to the process.
Yeah, absolutely. So let's say, you know, we're aware that there could be a number of things. If there is a clean title, and what happens next in the process?
Assuming everything's gone and your offer hasn't expired, okay, because the offers come with expiry dates, so we'll come on to that in a second, but let's assume that your offer hasn't expired. What happens is a report on title or a certificate of title goes back into the lender. They ultimately spend a couple of days to review it, sign it off. If they're happy with it, it'll move to the next stage. If they're not happy with it, it'll bounce back to the solicitors with more queries, questions, and so on. But we're at the very final stages now, really, of it. Assuming they're happy with this, then the solicitor will request the funds and you will have a completion date in effect. So you will now know what your completion date is likely to be. And they will request the funds to be drawn down and paid away to them so that they can actually complete the transaction on that front.
And obviously, anyone who's in this space knows that you have to complete on a Friday, right?
Why do they do it? Why do they do it to themselves? I have no idea. There must be a reason, because why don't they complete on the Tuesday?
It's just a bit of a running joke. So for anyone who isn't aware, generally most completions tend to happen on a Friday. It's just the day. There must be some sort of reason for it. But one of the reasons is, you know, you may need to request the funds. You know, historically, you would have to request the funds on a Monday, and then they would give them the time to come in, and then obviously give the opportunity, and then people would actually physically move house on the Friday, which then gives them the weekend to, you know, sort the house out or whatever before the weekend. I actually don't know the reason for it, but it's funny how it's always done. And then if it doesn't complete on the Fridays, you know, you could do it on the Monday or Tuesday, but it still ends up being the following Friday for some reason. So it's very rare you have a completion in midweek. So yeah, just a nod of the head to that. So yeah, once they've had the funds, you know, approved and everything, then they can request the funds. And generally speaking, you will look to exchange contracts, for instance, this Friday, with a view to complete the following Friday. But you can exchange and complete on the same day. Obviously, once you do exchange, you are legally obligated to then purchase that property. And usually there needs to be a deposit at that stage, and that can be, it doesn't have to be, but usually there needs to be some sort of deposit paid at that point. And then usually, again, you can exchange with a delayed completion. So there is a completion at some point in the future. Now, most times that's a week away, but sometimes that can be 6 months away. If there's a conditional exchange, maybe someone wants to exchange to confirm and then go for planning, and that would be a conditional exchange, but that's a little bit more complex and outside of the scope of this series. But once you do exchange contracts, you are obligated to insure the building at that point. And this is something that people miss. And we've actually had an instance where, and they did have the insurance there, but there was a leak in the property in between exchange and completion, and there was a significant amount of damage. Luckily, they did have the insurance in place from the exchange, and obviously they were protected. But that could cause because you could have exchanged, not have insurance, the property had damaged, and it's your liability to fix. So yeah, that's something that that's a really important point in this process. And I mean, ultimately, people say once you exchange, you can't change your mind. You can change your mind and you can pull out, but you will lose your deposit, and you could potentially be sued by the seller, for not completing, and fine you and charge you interest and various things. And this does sometimes happen at auction. I know of one vendor who actually did really well at auction because they sold the property 3 times at auction. The buyer paid a 10% deposit and 3 times the buyer pulled out. So and I think it was only a £50,000 property. They'd had half the money just by taking deposits off people. So, that does happen. It's rare, but it does happen. And then, as you get towards completion day, what's the process, as you approach completion day?
So you mentioned about the insurance. Ironically, that's one of the things that people forget about, and it is one of the last things that gets addressed from that perspective. So on completion day, well, there's quite a lot that goes on. So I guess from our perspective, we sit back and we just wait for the solicitor to tell us this all is done. Very often, though, there's last minute running around to solve issues and problems, and they can be wide and varied. I haven't got this document signed, or I need to get this bit of paper signed, and various bits and pieces. So there can be a flurry of activity on completion day itself. And we have had scenarios where things just haven't, as you say, haven't had complete. I've asked to push into the next couple of days. Now, if that does happen, then sometimes the lender has to send the money back. So they can't hold the money indefinitely. It's sat in their bank account. They have to send it back. And then they might need another 5 working days to request the funds again. So again, not hitting a completion date can have consequences. That means it could delay things by another fortnight. And we spoke about this before the episode, is around chains. So if you're in a chain, you could see how this chain could, and you've got 4 or 5 people that are all trying to complete on the same day and trying to orchestrate it all, how one mistake or one bit of paper could blow the whole thing apart, and everybody's got to wait 2-3 weeks. You're booking time off work if you're looking to move.
Well, my parents moved last year, and I think there was 14 people in the chain. So if you can imagine, and a lot of those properties were actually quite close to each other locally. So if you imagine 14 people trying to move, the logistic headache of that, just in removal companies, I don't believe there's 14 removal companies in the area. So if you could imagine the knock-on effect of one, though you have to book the removers to all come, you need to vacate your property in the morning, and then everyone needs to coordinate so that you can move in the afternoon. And that's a mess. And if one thing goes wrong and someone hasn't ticked one piece of paper or got one thing sorted, those delays on the day of completion can sometimes happen late in the afternoon. And that's where it becomes very messy. And obviously, if chains do fall down, you then have to cancel your removals, and that's 14 people who've had to cancel the removals. There's a cost of that, and going through the process all over again. People would have had to take time off work and things. So, it is really important. And this is why you see people like in where there are chains, if there's other people, if they're selling houses, they'd rather sell to a first-time buyer or somebody who's not in a chain compared to someone who is in a chain, because it just removes a lot of these headaches.
Yeah, definitely. And we as I say, things like that are just complex in nature. You may be bang on it as the borrower, and have all your ducks in a row, but you can't control other people, unfortunately. And and that is a big risk. And we've seen it happen several times.
And then I guess just to keep it really simple, and this is, if everything's gone into place, the lender will release the funds, the solicitor gets the funds in, they transfer those to the other side. Both sets of solicitors confirm that the transaction's complete, and then the keys get released. You can go and meet the agent or whoever it is, pick up the keys, and you've got the property. So that's obviously everything running smoothly. And then what we're going to just chat about, some of the things that can go wrong. We touched on some of them, but just kind of list out some of the key things to consider and understand before it all is done nice and smooth. So what are the things that you do see kind of going wrong?
So it's well documented. There are challenges with HM Land Registry. There is a significant backlog. Some say it's up to 2 years. With certain inquiries or certain applications. So there is a challenge there, and it's a hangover from COVID and so on and so forth. So if there is an issue with title and you need to deal with it at land registry, that can cause quite a significant delay. There is a process where you can expedite the inquiry to be where there are financial commitments involved. But nonetheless, it is still can complicate matters. We have instances where the searches that will get done on a property, that is very dependent on how efficient the council is, that you're going to get the searches back. I know of a council not that far away from us. You're looking in excess of 4 weeks, or you were, when I was dealing with a particular case that was over a month before the searches back. Well, you don't know how to answer the questions if you don't know whether there's mining and all sorts of things going on. So that's really important as well. And all of these sort of mini delays, if you like, which is a week here and a week there, can impact your offer. Your offer has a maturity date, an expiry date on it. Now, that differs from lenders. It's usually around 3 months. I've seen them as short as 30 days, especially when we had that issue where the interest rates were going up and down every other day. A couple of years back, they were 30-day offers because of the challenge that we had. Now, you can extend an offer. However, the underwriter needs to probably take another look at it. They don't just randomly extend offers and say, you can have it for another month. It'll go back into underwriting to have a make sense check. Has there been any change in circumstance? They might do another credit check on you to make sure there's been no defaults, missed payments, or anything like that in the interim. So that can impact. And some lenders are now charging to extend the offer of a couple of £100. So that's something that can be done. Now, the maximum you can usually extend it to is up to 6 months, or the length of the valuation. A valuation report is valid for 6 months for security purposes. So as long as your offer doesn't exceed the 6-month window of that valuation report, you can usually push it up to there. After that, that is a drop dead date. You've got to go and get a new valuation report, get that valid within 6 months. We do have some scenarios where we've got the valuer to agree post the 6 months, add another month's grace and say that nothing's changed. And then they've been able, but honestly, you don't want to be playing that game because that can fall over.
I was speaking to someone yesterday that they had a mortgage offer expire, and they were ready to complete, but it expired, and the solicitor had missed it. And I said, surely they give them this was a 3-month offer window, and it wasn't a client of ours, actually. It was just an investor I was speaking to at an event, and they said, no, they'd gone back and requested an extension, and the lenders turned around and said no. And full new application, new valuation, start the process all over again. I don't get it, personally. I don't really see why lenders do that. You go to all the work and time and expense of getting it to that point. I can't get my head around why they go through that. But yeah, it's frustrating for all parties, and it's just painful.
The only way that I can see, though, the rationale for it is that they've booked the funds in for that cost, for that expiry date.
Transfer funds.
And then pushing it over means that they can't lend at that price. So you have to go back through the process and book the funds at the right price. That's the only reason I can see why a lender would be difficult.
It's usually the smaller lenders, isn't it, that have that, where they've got specific transfer funds from certain, for certain projects. Anything else that causes offers to expire? I know certainly, in one of the big ones is around new builds. New builds generally have and longer offer periods, because the way that big developers work is that you have to, you're buying a property before they want you to exchange the property before it's even built. So, that lenders will have specific new build products available with longer completion dates, and that'll just get reviewed. So if you take out new builds, that's a bit of a category of its own. But other than that, that if you've got a new build in the chain, then obviously, you're very open to, the builder being able to deliver on those promises, and that causes issues. I know we mentioned titles and searches and various other parts. Another one, and I know you did mention it, is a credit check. I actually had a client in the past who he got declined post offer, about to complete. He bought £100,000 about £70,000 camper van on a loan, £70,000 loan on his credit with a £800 or £900 per month payment, which obviously shot his credit report in the short term, and he then failed the credit search, so he missed out on that deal, and they withdrew the offer. So these are the things that sensibly, if you're undergoing this process, just making sure you're checking in with the various things, because that materially changes your affordability between when you applied and when you're looking to complete, which is for the same transaction. So it does make sense why lenders do that, to make sure that you're maybe not borrowing the money for the deposit. That's something that someone might consider doing, and that's just a way for them to sense check against it.
Yeah, I've viewed this scenario before in previous episodes. So I had a client, large property developer, very experienced. We had all evaluations done. It was at offer. It was basically just before they complete the loan, they run another quick credit check, which is just usually a procedure. And one of the parties to the company who had emigrated got a parking fine and didn't know about it, and then it turned into a CCJ in the process. So obviously it passed first time, didn't pass the second time. Now, when you consider that most lenders are intermediary lenders, so they're lending other people's money, so they've got credit funds and credit lines that they actually lend out. They aren't actually lenders per se. Well, we just couldn't complete. This was well over £1 million worth of mortgages that we couldn't complete because of a £200 CCJ on a missed parking fine that had happened in the 3-month window between offer and completion. And we had to evidence that it was wrong, but that wasn't good enough. We actually had to have it physically removed off the credit report before they would consider, and they gave us 4 weeks to sort that out. To be fair to the client, they moved heaven and earth and got it done, which I was pretty impressed with. But
don't see that very often.
But that's the consequence of just something minor that will break it. Probably, simply because their credit fund in line wouldn't allow somebody with a settled or unsettled CCJ. End of story. Loan over.
So we've touched upon a number of the reasons, why things couldn't go wrong at this stage. Offer expiry, we've just gone over in a bit of depth. Search delays, insurances not getting in place, issues with the title and things like that. Another one that we probably haven't mentioned is miscalculation of funds on completion. This does happen from time to time, and especially more recently, where people are using either completely missing or forgetting about stamp duty or land transaction tax, but also miscalculating it. Sometimes they might have used the wrong calculator based on the location, and that can cause problems. They might not have been aware of the surcharge if they are buying an additional property. So if you're a first-time landlord buying a property for the first time, you might not be aware of the surcharge, which is 5% in most places. So on a £200,000 purchase, it's an extra 10 grand that you might need to find. So it's not an insignificant amount of money. And then all of a sudden, if you're using all of your money for the deposit and the fees, finding 10k or more on at the 11th hour can be a challenge. So yeah, that's something I know that we've had some headaches with in the past as well. Anything else that you think that we may not have missed? Obviously, we've talked about change collapsing as well.
Yeah, I think that the point to this is there's rarely one thing that messes it all up. It's usually, yes, you get your showstoppers, but they don't happen that often. Often it's accumulation of small little bits that will either lead to offers expiring or deals not completing. So a lender will often take a view on their risk appetite to an event. Okay. When you're asking them to take a view on 6-7 events, it becomes increasingly, the risk profile is getting worse and worse and worse. And eventually they just say, no, enough is enough. We can't overcome all of these problems. So I guess the message from all of this is stay on top of the process, try and deal with issues as quickly as you possibly can, and don't let them snowball into something they don't have to be. Trying to fix them on completion day is not doing anyone any favors, irrespective of other parties. It's a stressful time when you're running around trying to get a document and your business partner is 30 miles away in a meeting and you got to get that signed before 3:00, otherwise the funds can't be released type stuff. And those are the sorts of things that happen a lot. So just trying to get ahead of the game really, I think, is the way forward.
And you just made a good point, the client that you had that to move heaven and earth. And ultimately, I think sometimes clients can rely too much on other people to do parts of the process, which is actually, this is your property. This is you are the key person in this event happening. You've got your broker, you've got your solicitor, you've got the lender, you've got the valuer. And we obviously try and help as much as we can, but it's you are the one that has to drive this. And that sometimes we see, and quite often people are quite quick enough to have a go, for instance, at the solicitor or a lender for taking too long to respond to a query or an application or whatever it may be, but then also aren't prompting their replies when they are waiting on things. And, they might have been, a joke in the past on previous episode that, you're waiting 3 weeks for someone to send you a bank statement. And then the day they send it to you, an hour later, they're asking you for an update. And you're thinking, hang on, we've just been waiting for 3 weeks for this document. And now you're asking me for an update. It's crazy, the mentality at times. But that's the reality. You have to take responsibility and you have to be the driving force in the transaction, and everyone else will fall in line.
Yeah. Oh, absolutely. And look, be a thorn in the solicitor side. Yes, you get there's many fantastic solicitors out there. There are many who I don't think intentionally look to make the process difficult. It could be workload. Your file isn't the only file on the desk. And when we had Sam Hawken on previous, he spoke about files having momentum behind them, because every time the solicitor closes that file, puts it on the desk, they've got to pick it back up, reread the file, get back into the case, and so on and so forth. So, and then it comes back to, if you're not answering things efficiently and fully and thoroughly, then they part answer a question, put it back down and pick it. So yeah, all of these things, it's just like, once it's got momentum, just keep it and just stay on top of all the parties that need to be there.
Yeah, and I guess these are some of the tips now we're moving on to around what investors can do to control the process. And the key is, don't be passive, be proactive and, stay responsive to the solicitor. Make sure you have your buildings insurance in place. Make sure you have your cash deposit in funds and ready to complete. So if it's in a bond that you can't, don't agree a completion date for the 1st of April and you can't access your bond without penalty until the 1st of May. Those types of things. And then you're like, I want to push on completion now. Well, actually, that impacts the offer. That means the offer is going to expire. So you now have to make a decision. Do you want to go through that process, or do you want to pay the penalty to release your funds from your bond? There's those types of things. Making sure you don't take out any new credit, staying on top of the offer and its expiry. And then obviously you start thinking about, from a rental perspective, starting to prepare for the after completion. There are plenty of things then. Once you know that you've controlled this part of the process, start having an eye on what's to come. And you should have already done this, really, but these are the things now, if the property, if you're going to let it, have you got your letting agent lined up ready? Are they going into, is there any work needed? You just getting yourself prepared. You could have the advert if the property is ready to go and you've been communicating with the sellers and things. You could have had your letting agent in the property already to do the description and have the photos and everything ready so that you could list the property on the day of completion, or you might have already listed it with a consent. so that you can pretty much move a tenant in ASAP post-completion. So those are the things, so that you minimize in your voids. Obviously, if there is work, then you need to go ahead and line up trades and builders so that that process starts to, again, to minimize, as in from an investor perspective, minimize, your void period, because you're losing rent. You're minimizing your holding costs, because as soon as you take control of the property, you are now liable for council tax, water, gas, electric, etc. And the longer that period is, the more you're paying out and the less you're getting in. So it's a double whammy from a cost perspective. And as an investor, you want to make sure you're maximizing your returns on your investment.
Yeah, and something else I think that is useful is if the process starts to become sticky, and you'll know, because you're not getting correspondence or what have you. So first and foremost, stay on top of the process so that you can track, and keep a note of when the last correspondence was. If it's been a week since you've heard something, or a fortnight, then you perhaps want to think about chasing things up, because you probably shouldn't go more than 2 weeks, I would have thought, before you get any sort of feedback or update from anyone. And even just a quick email ago, everything, just checking in email is a good idea. One thing that I find works well, if you're working with a broker, give your broker the heads up that things aren't moving quite the way they want to be. We will often email the solicitor to see if there's anything that we can do to physically help. And sometimes we can influence the process by picking bits of work. Sometimes they're waiting on responses from the lender about an underwriting question, which we can follow up and chase up and so on. So do that. But one of the key things that I tend to ask people to do when things aren't going quite as planned is I get asked to be CC'd, copied into all the communications between both solicitors. As I say, there are fantastic solicitors and there are some who perhaps aren't as responsive as others. And each solicitor likes to blame each other. And you never really get to the root cause of what the delay is, because someone's sort of saying, well, I didn't get this and I didn't get that. Well, if you CC'd in other communications, it's pretty obvious who's not responding because you can see it. But also remember as well, sometimes it's not the solicitors that are delaying the process, it's the seller. They've got to be bought into it as well. They've got to be responding. Now, they may be delaying for a reason. They might have a chain and they may be waiting on a transaction, and et cetera, et cetera, et cetera. So it's really easy to jump on the solicitor's back in this process. They might actually, the seller might be intentionally delaying the transaction and so on and so forth. So there's a number of moving parts is my point. And by having open communication and email, you can tend to get to the bottom as to why these things aren't moving quite the way they should be.
Yeah, absolutely. So then we talked about, some of the things that you'd want to kind of start thinking about as we wrap up this series now, and the thoughts we just touched upon, some preparing for life after completion. What are any key things that we haven't covered that you need to do on completion or after completion?
Pop the cork on your champagne to say well done, because you've got it done. Don't put a picture of your keys on social media.
No, you've got to have a photo.
You can't do
outside
that.
Well, you're not a landlord. You're not an investor. You're not an investor if you haven't had a photo with a set of keys outside there.
But isn't there a thing though with the picture of the keys that people are copying the actual the image of the key can actually be copied to actually make a replica key.
Wow.
Yeah, wow. So genuinely don't do it, but blur it out like you've got a young child hanging from a key ring or something. I don't know. But I think the main point for me is ownership of the process. You can't control some of these things that we've spoken about. We're just making you aware because they exist and they can crop up in a process. And to be fair, no two applications or no two legal processes are the same. All my takeaway would always be with this is just take ownership of the process. Don't let it drift. You can put pressure on everybody to just make sure that the comms are the way they should be so that this gets to the outcome that you need.
So two things I think which are quite important, which people don't realize. And one of these is, I'm only addressing this now because a client of ours, I saw a video of his online this week actually, where this a property that he bought, I think it was 12 months ago. He's just had a letter from HMRC or something that the solicitor did not. So when you pay your stamp duties, when you send your completion money to the solicitor, that will have your deposit money, the fees, and also whatever stamp duty or land transaction tax that you need to pay for that property will all be included within that completion statement. So you transfer it all. And then the solicitor then submits the stamp duty form to HMRC and then pays that on your behalf. So what happened in this instance, that the solicitor didn't submit that form and didn't pay the stamp duty, even though he's got evidence that he sent it. And that solicitor firm has now gone bust. And now HMRC are chasing him for the stamp duty, which he's going to have to repay again, which isn't an insignificant sum of money, and then have to go try and recoup that money somehow from a firm that isn't around anymore. So that is, one of those scary things that, that could happen to anyone. And that's a really easy thing to miss. Why would you think to not do that? So that's something that you could maybe diarize for evidence shortly, because it needs to be submitted 28 days or 30 days post-completion. So that's something that you could diarize post-completion. Also, then the other one that sometimes happens is if people are looking to do transactions where they are doing, for instance, a buy, refurbish, refinance strategy, if you need to make sure that the property is then registered at land registry in your name or the company name that you're purchasing through, because when it comes to refinance, and if you're going to do that quite quickly after you've completed and completed the renovation, you can't carry out the refinance at some until the property is registered in your name. Now, some lenders will allow you to apply, but not complete until the transfer has happened. But some lenders wouldn't even let you apply until that property is registered in your name. And obviously, if that paperwork hasn't been submitted, then that can take some time at land registry, as you mentioned earlier. So those two are really key things that people don't really think about. It's quite important to make sure you just could follow up with it post-completion.
Yeah. Well, we literally had 2 mortgages which had just completed this week, and there was a bridge loan which matured this week, and that exact issue on both of them. They'd have bought them, the properties weren't in the names, we couldn't complete the refinance until this was done. Then we'd had the whole application. One of them went through relatively swiftly in terms of the land reg piece, and as I say, completed this week. The other one didn't fit into the expediting process or expediting process. I can't remember the exact reason. And literally the solicitor was like, I just got to sit here. There's X applications before us, and we just got to sit and hope that it's done in time to repay your bridge loan on time. Luckily, it did. But that was literally just sit and pray, basically.
So those are the couple of really important pieces to view. Then on top of that, then, we mentioned setting up the rental and getting that. You then also want to probably consider about tax planning if you haven't already. We mentioned that earlier on, and accounting and things. And then actually portfolio management, which is something we haven't really talked about, but we do have some software called pintech.io, which as a landlord will help you manage all of your mortgage, insurance, compliance, and admin functions all in one place. So rather than having multiple spreadsheets and missing deadlines on mortgages or missing insurance deadlines, all of that can be managed within the software. So if you haven't heard of it or haven't had a look at it, then we suggest you have a look at that. It's free at the basic level to play around with, and we welcome your feedback on that. But we are getting a number of our clients and landlords now moving on to that because they recognise the admin burden that's really getting on top of people now that there's so much more regulation in place, that it's really important to have a simple solution that can cover everything you need from a landlord perspective. And with Making Tax Digital coming into play, we've noticed now a far greater increase in demand because of that. Because for those of you who don't know what Making Tax Digital is landlords need to, if you're in a certain bracket, will need to report on your rental income on a quarterly basis rather than an annual basis. So that's something that's becoming more and more apparent and people are needing. So anything to add to that, Mark?
No, I think the feedback has just been really strong with that. Yeah, and as you say, takes a lot of the heavy lifting off some of the management of that. MTD, Making Tax Digital, is probably going to be quite a shock to the system this April for a lot of people who are underprepared for it. So even if you don't use the software, just get ahead of that curve, because that could be a painful exercise every quarter if you're not careful.
Yeah, absolutely. And then also probably then just making sure that you've got the right protection in place. If you haven't got, making sure you've got life insurance to cover the debt, so that if something were to happen to you, that, ultimately most people are buying property for long-term wealth creation and to give their family, build wealth for their family. So what you don't want to do is take out, buy a few properties and not have any protection. You die and you just leave a massive headache for your family, which is probably going to leave them in a worse financial position than you were if you just get this all set up correctly. And obviously there's a long-term inheritance tax planning that you'd probably need to do as well based on your overall wealth. So yeah, I think we've pretty much covered as much as we can within the time. And anything to add before we kind of wrap up the series there, Mark?
No, I think it's been pretty comprehensive. 4 reasonably long episodes, doing quite a deep dive into each of the stages. I didn't even think there was that much to talk about, to be honest, but clearly there is, and we could probably keep going, to be fair. So I think nothing to add at this stage. As always, though, if people are getting difficulties or want to chat through any of the concerns on any of their property transactions, then of course you know where we are. I'd be more than happy to have a conversation, even if it's to help signpost you if you're already in the process. We're here to, bounce some ideas off, or if you've got any struggles, then get in touch.
And look, I think there's plenty of good brokers out there, and we genuinely believe there's enough business out there for everyone. But you just do need to be using a broker, because if you try and navigate this landscape on your own, you're going to catch a cold. And just use a broker and get someone on your side. And ultimately, a broker's on your team. They buy into what you're trying to do. They buy into the goals and aspirations of what you're trying to do from the property perspective, and they're on your side and they're in your corner and they know the market. So let's wrap it up then. So ultimately, hopefully you've listened to all 4 episodes. And you've probably, through that, will start realizing that property investing isn't about the moment, you get the keys. It's about managing the process, managing risk, managing finance, and timing everything properly from day one. So, that's it from us on this little mini series. Hopefully you've had some value from it. And if you have, then as we always say, please share it with your friends and family and other investors. Property purchases aren't glamorous. It takes discipline, and investors who stay organized and proactive are the ones that avoid the stress, the delays, and the unnecessary costs. So we'll leave you on that. Thanks for your time, and we'll see you on the next episode. Thank you, Mark.
Yeah, fantastic. Thanks, Ed.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.